Ladies and gentlemen, welcome once again to the Sprott Vancouver Natural Resources Investment Symposium, in this case the virtual edition rather than the Vancouver edition. Today we have what I think is a real treat. All of you know that for many years one of the most important themes of the Sprott conference is what we call know who. We call it know who to differentiate it from know how. No group that Sprott has worked with has been more serially successful for a longer term than the Lundin family. We, or more properly I at Sprott, have done business with the Lundin family since 1975, I'm embarrassed to say. In fact, I've done business with the Lundins longer than some people on this call have been alive. And I need to say that the Lundins, beginning with Adolf, who I think we should dedicate these remarks to, have an absolutely unparalleled history of success. And we're going to talk on this discussion about the ways that that success occurred and how the Lundin family and the Lundin groups past, how the traits that made them successful in the past are likely to make them successful in the future, and why people who enjoyed being shareholders in Lundin Group companies for the last 4 decades should enjoy being shareholders of the Lundins for several decades to come. There are themes that we're going to discuss, and by the way, we have 3 Lundins plus a variety of frontline Lundin managers on the call. We're going to talk about the fact that the Lundin Group has been contrarian. They have been willing to be in materials that other people didn't like, or at least be there before other people did. The Lundins are also cosmopolitan. They have operated in countries that most of their competitors couldn't spell. The Lundins are extremely aggressive. Lucas calls himself the decider, and you'll hear about why. They're technically very competent. They are importantly aligned. The Lundins are owner-operated, which we'll talk about. They are tenacious. Often the Lundins work a decade to be overnight successes. And there's, I think, a lesson there. You will find, too, that they are, in almost every circumstance where they operate, low-cost producers and efficient capital allocators. And if the circumstances arise where it is better for shareholders because they are large shareholders, they are willing to sell the entire company rather than milk it over time for their own benefit. So we're going to operate this discussion very much as a discussion. I'm going to ask questions that I think will bring out the themes that are important for investors to understand about the Lundins, about their past successes and about their futures. And I'd like to start with my old friend, literally and figuratively, Lucas Lundin. I want Lucas to address the nature of owner-operated businesses. Talk about the fact that the Lundins are aligned with shareholders because they're large shareholders, and how that has contributed to the success of the business going all the way back to 1975. Lucas, talk about your businesses as owner-operated businesses, please.
Yeah, thank you very much, Rick. We're very happy to be here at your Sprott conference on Zoom or whatever, the new world we live in. But as Rick said, I've known Rick for a very long time. And of course, we're owner-operators because we're really strong believer in what we do. So we like large projects, big projects. You know, if we're going to gain a lot of it, we need to own significant interest in the project, so or the companies. And we're 100% aligned with our shareholders to try to, you know, achieve best value possible, which could mean build a company or sell the company or advance a project and sell the project. You know, it's many different ways, but we're always thinking what's best for shareholders because we're very large shareholders, and it takes a lot of time to acquire a project and find projects and bring them forward, you know. And so for us, we're not interested in having small percentages in this, and we're always very happy, you know, as all this resource company requires money, we are quite happy to align with the shareholder and raise money together, you know. So we're definitely very shareholder friendly because I'm friendly to myself and ourselves. No, so So and then we've been very involved in different places of the world. Maybe it's controversial, but you can't decide what nature of the ore body or oil field is going to be. You go where the asset is and trying to acquire it. So we've been looking a lot, and we've been very successful through exploration in mining and oil and gas. To be tenacious, we're going to talk about Jose Maria, Filo, and NGX, and those assets we've been working on for 20 years now. They're finally coming out looking really, really good. So it's very hard to create instant success in this business, and that's why we have to hang in there. We don't want to end up at success time with only 1% of the company left. So we've been fortunate enough to have been able to make quite a lot of money over time, so we've been able to follow through with our investments.
One of the tenets of success in the Lundin Group over the last 30 years has been to focus on tier one deposits. I remember having a discussion with Adolf Lundin about 30 years ago about Eastmac. And he said to me, a small deposit is more work than a big deposit, but a small deposit can never make you big money. And importantly, the Lundin Group has focused over time on tier one deposits. Ron, I'd like to direct a question to you about the group's focus on tier one deposits and how that has aided you as a frontline manager in the Lundin Group, and also the operational and investment merits of tier one deposits, particularly in your case, the one that you're working on now. Ron?
Yeah, thanks, Rick, and thanks again for the opportunity to be here with the Sprott Group. Yeah, tier one deposits is key, and as you mentioned, just a few years ago, we were able to acquire Fruta del Norte in Ecuador, which is arguably, and many people have said, one of the best discoveries in the past 20 years, gold discoveries in the past 20 years. Now, tier one deposits, making a tier one deposit value for the shareholders takes a lot. It's just not the deposit, as we've seen in Ecuador. There's the ESG side of things. There's having great teams in terms of construction, being able to put together the financing, and obviously supportive shareholders. But a tier one deposit can create such value for your shareholders because the quality, the size, there's so many different factors that come into play. And Fruta del Norte is pretty unique. But if you look at the history of the Lundin Group, the discovery of Valadero, the discovery of Wheeler in the Denison, the purchase of Caraway, throughout the group, we've got these tier one assets, and they are so important to creating shareholder value. But it's also just not having the asset, but having the team to properly put everything in place to create that value and then grow that value, that asset.
Ron, you even before you came to work with the Lundins back in your consultant days, operated or consulted on a wide variety of deposits. Perhaps you could talk about the difference between tier one deposits and tier two or tier three deposits, just in terms of risk reward. I always loved Adolf saying that small mines had big risks but could only make you small money. Big mines had the same variety of risks but could actually make you big money. And if you could talk about that in the context of your history, not just with the Lundins, but before in the consulting side of the business.
Yeah, Rick, it's a really good question. There are so many deposits that I've seen through my days in the mining industry with large Canadian company and then consulting. You can put so much effort in a very small tier two, tier three deposit. And at the end of the day, if you don't hit the price cycle right when you're starting up, or you have any risk, any issues with your mining process, you're in trouble. Tier one deposit gives you not only the upside for rising prices such as we have in gold today and some other commodities, the shareholders have a significant upside runway, but also your risk profile is so much different with a tier one deposit. You've got that flexibility. You've also got the ability with a tier one deposit to look at expansion and growth and opportunities, where tier two, tier three, all you're really looking at is a lot of times, how am I just going to keep surviving, let alone looking at opportunities for growth?
Our mutual friend, Pierre Lassonde, once said, Tier 1 deposits always give you surprises, and they're always good surprises, which is something I love. I'd like to move on and talk to Jack Lundin about the same question about Tier 1 deposits. It's very seldom that the investment community has the opportunity to invest in a phantom Tier 1 deposit with a group that has been as serially successful as the Lundins. It's important to note over time that they have bought and or discovered several Tier 1 deposits. But a market like this, which is beginning to awaken, the fact that there is a potential Tier 1 deposit in the Lundin portfolio that's largely unknown presents an interesting opportunity. So I have particular pleasure in addressing this question to one of the third generation of the Lundins, Jack Lundin. Over to you. Phantom Tier 1 deposits in your portfolio, please.
Thanks, Rick. So I'm the CEO of Bluestone Resources, and our flagship asset is the Cerro Blanco deposit located in southern Guatemala. Now, we talk about Tier 1, Tier 2, Tier 3 deposits, and I think because of the size, Cerro Blanco can't necessarily be classified as a Tier 1. But what we do in the Lundin Group is we look for assets that are considered world-class. World-class assets are deposits that you can develop at a reasonable price, but then you can produce at a low cost. And so you're generating significant margins and free cash flow that you can then put back into the ground, or you can look for other opportunities in the jurisdiction you're operating in, or wherever the strategy of the company may be at that time. And so for us at Bluestone Resources, we've got a project that we're working on rapidly advancing towards the development phase and getting it into production as soon as possible, and really following kind of the footsteps of what we did over at Lundin Gold with Fruta del Norte. And what you see there is an investment opportunity, because when you're a junior developer, you're measured against other developers. But then when you're a producing company, you jump into a new field, you're in a new level playing field against producers. And so naturally what you'll see is your company will be re-rated in the market. And if you deliver on budget, on schedule, and stay true to your word in the market, then your share price will just naturally go up. And so I think for Bluestone Resources, as a smaller company in the group, it's a nimble company and we're a lean management team, but we've got a really good opportunity to, in a short period of time, generate some significant returns for our shareholders. And so I was fortunate enough to cut my teeth on working at Fruta del Norte under the tutelage of Ron Hochstein. And now we're looking at replicating the success at Cerro Blanco. But that's what we're going to continue to do. Once Cerro Blanco is built, we'll continue to look for projects that will generate returns no matter what the commodity is doing in terms of the price of that commodity. That's where the Lundin Group sets itself apart, looking for projects that no matter what the commodity price is, you're still able to generate significant returns.
Jack, tell us briefly about the deposit itself. Tell us about what makes it attractive and why you think it'll become a low-cost producer and enjoy the type of margins that the Lundins have enjoyed over the years.
Sure. So Cerro Blanco it's a very high-grade deposit. It's about 10 grams per ton. Right now, our resource is about 1.5 million ounces. But it's a near-surface deposit, and there's already a significant amount of development work that has gone into the project by the previous owner, which was Goldcorp. So Bluestone picked up the asset in May of 2017, and since then we've completed a feasibility study. We're continuing to drill out the deposit, which is an epithermal deposit, and it tends to have the gold is locked up in quartz veins. So we've got very high-grade quartz veins throughout the deposit, and we're still understanding kind of the orientation of those veins and, to the extent of the ore body, how far these veins extend. And then that goes into our mining plan with our engineers and how we can maximize the value. If the ground is good and there's a cluster of veins, you can take those in stopes. And stoping is a cheaper method than, for instance, selective mining, which is, cut and fill, and you have to use smaller equipment. So what we try and do is see how we can maximize the development, see how we can maximize bulk mining underground. And when you have a very high-grade deposit, you're able to have that flexibility. And so that's the thing. This is a high-grade deposit, and because of that, it's a low unit operating cost. And therefore, we're going to be producing in around the first 3 years around 150,000 ounces per year. but at around $600 an ounce. So when you look at the gold price today, above $1,800 an ounce, those margins are very attractive.
To say the least. Moving on, the Lundin Group over the last 40 years has been extremely agnostic about commodity type, willing to make money in virtually any commodity that was offered to you. The family, pardon me, has made money originally in the oil and gas business, but in the gold business, the copper business, the boron business, pick a business. So I'd like to talk about a couple of markets that are of interest to our customers, that is the gold market and the diamond market, and something about the attraction of those markets and the attraction of the Lundin assets in those markets. I'd like to start with Ron Hochstein of Lundin Gold and talk about the gold market and why this particular asset is an attractive opportunity within the subset of gold stocks. Ron?
Yeah, Rick, with Lundin Gold and the Fruta del Norte deposit, we are essentially going to be producing on average over 325,000 ounces a year at an all-in sustaining costs in the low 600s. And so the rising gold market we're seeing today is a phenomenal opportunity for our shareholders in terms of generation of free cash flow, and then the opportunities that, as Lundin Group tends to do, to use that cash flow smartly. The gold market is one of those markets that, unfortunately, when the rest of us the world seems to be going in the trash can, the gold market is one of the places that you will get some joy out of. And that's what we're seeing today. And obviously, with all the changes in the world and the trade tensions, et cetera, huge government deficits, the gold space is actually a very exciting space to be in right now. And with an asset like Fruta del Norte, and even the gold production we see, and the up-and-coming Bluestone and the gold production we see within Lundin Mining, there's some great opportunities in this market. The gold market is also not only exciting from a rising price, and we're seeing projections now $2,000 an ounce, $3,000 an ounce in the very near future, prices we have never seen. We also are seeing, though, a dearth of new projects in this market in particular, which means that supply is starting to become a bit of an issue. So you got the double whammy of potentially really strong price environment, but also on the supply side, it's a lot of question marks in terms of future supply. It's really a great perfect storm for gold and gold producers and shareholders of gold companies.
You know, Ron, it's interesting looking at the gold market and looking at the Lundin Group's response to the gold market, which is to say, having the wisdom to be sellers when the rest of the world is buyers, and having the wisdom to be buyers when the rest of the world is sellers. It's instructive, I think, in particular, to remember the Lundin Group's success at Tasiast and their willingness and ability to sell that asset for, if my memory serves me correctly, $7 billion at the top of the market, and then having the courage to buy Fruta del Norte, ironically, from the same group that bought Tasiast, at the bottom of the market for $250 million. Could you talk something about the courage and the foresight to buy low and sell high? Easy to say, tough to do?
Very tough to do. I wish personally I followed what Lucas does with assets, because I'm not always the best with shares. But yeah, you know, and I can remember Lucas saying too at the same time, after the sale of Redback and which Tasiast Ghana assets was a phenomenal opportunity for Redback shareholders. Lucas saying, I'm not sure if I want to get into gold again. I don't understand that market. It's not one that's traditional supply demand. It's driven by so many other factors. Yet when the opportunity to purchase such a great asset as Fruta del Norte arose, you know that that's an opportunity you cannot pass. And many people had said, oh, it's in Ecuador. That's the challenge. Again, tier one assets and opportunities are created by not just looking at the asset, but looking at the ability to put something into production. And yeah, we acquired this for 240 million. You got to remember, Kinross had acquired it originally from a company called Aurelian for 1.2 billion. And our opportunity then to purchase it in a downtime, in a difficult location, really shows I think the attractiveness for shareholders of the Lundin Group and the ability to do something when other people say it can't be done.
I'd like to move on to a different and fascinating market, and one that I must admit I don't understand at all. We are very lucky to have Ms. Ira Thomas with us, who has, in her own right, separate and apart from the Lundins, been really, truly, serially successful in the diamond market. And the diamond market is the most obscure market that I am personally familiar with. So Ira, if you could talk to us something about the diamond business, about the Lundin diamond assets, and about how you operate in what I see as an extraordinarily exotic market, please.
Thanks, Rick. It's a pleasure to be here today and joining the conversation. I am the CEO of Lucara, and our flagship asset is the Karowe mine, which has been in production in Botswana since 2012. And like all of the other assets we've been speaking about today, what really sets Karowe apart is that it's a high margin asset. And, you know, since we've been producing for almost 7 years, we've achieved margins in excess of 60% throughout that period. The mine is also really well known for its production of very large, high value, unusual diamonds. So, you know, Karowe does stand a little bit on its own within the diamond space. And that has really been a salvation for us because, quite frankly, it's been a challenging diamond market in recent years. And going into COVID hasn't made that any easier. But as all Lundin companies do, you know, we've really rallied and used the kind of the challenge of the current market as an opportunity to think about our business and how we can do things differently. And I think what is most exciting about where things are going for Lucara is that we have now seen the diamond market and the demand for diamonds actually start to turn around. And surprisingly, it's not really about jewelry at this point. As we've seen the gold market really strengthen, investors are looking for other ways to invest, and they're looking for other hard assets. And we're actually finding that our large, high-value diamonds have become really a key focus area for investment purposes. So we're seeing emerging demand in China for diamonds, and that is something that we didn't necessarily anticipate, but that we are certainly catering to now. And you know, Lucara is looking for ways to really maximize the value of our product, and so we're selling not only into our traditional kind of jewelry channels, we're actually selling into Asia diamonds for investment purposes.
You know, Ira, I want you to brag a little bit about some of the stones. I don't know very much about the diamond business, but I have a sense that when you find a diamond that resembles, at least in terms of dimension, a baseball, you have found something unusual. And it seems to me that you have found unusual stones with unusual frequency. If you could talk to the market for unusual stones, but also the proclivity of this deposit to deliver them, I think that would be fascinating for our audience.
Yeah, no, absolutely. I mean, you know, since 2012, when we started producing diamonds from Karowe, we have basically generated, you know, a couple $2 billion in revenue, and 70% of that revenue comes from diamonds bigger than 10.8 carats. And we've produced some historic diamonds, the Lesedi Lorona, which weighed in at 1,109 carats and was sold for $53 million, which is about the size of your fist. And then a slightly smaller diamond, the Constellation, which is over 800 carats in size, and that actually sold for a record price of $63 million, and it's the highest price ever paid for a gem quality diamond. Both of those size records were surpassed last year when we recovered the largest diamond to have ever been found in Botswana and the second largest in the world. And that was a historic 1,800 plus carat Sewelô diamond. And what's exciting about that stone is that we've actually partnered with the world's largest luxury brand, Louis Vuitton, who are super excited about this stone. It's quite a mysterious stone because it's not a perfect and white stone like the Lesedi or the Constellation. It has some black components to it, but Louis Vuitton sees this as an extraordinary find of nature. They wanted to travel with this diamond around the world, promoting natural diamonds and how they occur. And the idea is that at the end of that world tour, we'll then polish that stone together and create an exclusive line of jewelry. And, for Karowe itself, I mean, it is a mine that, continues to recover these historic diamonds, these large diamonds. It's a big value driver. But what's truly exciting about Karowe now is that as we've drilled deeper in this deposit, we've actually learned that the bulk of the value in this ore body is actually still in the ground. And, at this point, we're now turning our minds to the next 15 years for Karowe. We are going to go underground. We're raising the capital to do that. And the best is yet to come. And we think that, this is the right time to be making that investment because, just as Ron was talking about the supply in the gold market, the reality is that diamonds are incredibly rare. They are getting rarer, and the supply-demand fundamentals are starting to really strengthen. And so we know there's historic mines around the world that are nearing end of life, and the Argyle mine in Australia will be close its doors at the end of this year. All of that is conspiring to a shortage of gem quality diamonds, and Lucara is going to be extremely well positioned to feed into that market with our existing open pit operations, and then ultimately expansion underground, which will see this incredible mine continue to 2040.
Ira, I'd like to stay with you and change topics a bit. I describe you as being individually serially successful at the same time that you work with a serially successful group. And I want to talk about incentivizing managers. You could have gone to work for anybody or started another company on your own. So I want to talk about the alignment of top tier managers with the Lundin Group, how they attracted you, how they keep you, and how you in turn use the Lundin mantle to incentivize the spectacular people that work for you. Talk something about management alignment within the Lundin Group, please.
Yeah, sure, Rick. It's about alignment, but it's also about culture. When we started Lucara 10 years ago, it was really, Catherine and Lucas and I sitting around, over lunch, talking about opportunities in Africa for diamonds, and there was strong alignment in how we view the world, going after good quality assets and trying to maximize the value of those assets for the shareholders. So complete alignment in terms of the ownership philosophy within the Lundin Group. But I think it's a lot more than that. I think it really is about the culture. And you see in talking to everyone here on the call today and within the group is there's huge passion and commitment. This is a group of people that love what they do. And they get really kind of inspired by working with people that like to do similar types of jobs and efforts. So I think that's a big part of it for us. It's about making sure that you have a team that is incentivized and that they have exposure to the upside, that they're shareholders as well. And that we have core values that everybody believes in. That's really, really fundamental. You don't see that in all organizations, and you don't see that in many large organizations. So one thing I really like about this group is that we've got a sense of family and a sense of culture, which I think is really kind of the driving force behind the success.
Ira, I want to stick with you 1 second. We're going to take you off script, but I know that you can do this. I know personally from having known you for 2 decades that the new buzzwords ESG were important to both you and the Lundins before those letters came to mean what they mean today. I know about the efforts of Lundin for Africa as an example, and the Lundin family's commitment to communities and social organization. You, of course, being an embodiment of the fact that they hired a female CEO merely as a consequence of your competence. So if you could talk to the cultural aspects of ESG and how that helps you and why that's important to you, I think that would be useful on this call.
Sure, and it's kind of an easy one. It's fundamental to how we work. It is not just about social license. It's about recognizing that you will be a stronger organization if you embrace the opportunity of actually being good stewards when it comes to the environment, of looking after your people and communities, which at the end of the day are your most important stakeholders besides your shareholders, and recognizing that there is enough in this big pie to go around, and I think that is how you garner support for the business and your operations and what you're trying to do. It's just the right way to operate. And Lucas, we've talked about this over many years, and it's fundamental to the way he's always thought about these assets. And I think it helps when you grow up in your career, actually being active on the ground in projects from exploration through to development, and you see the impact of your operations, on the communities of interest in which you're working, and it creates a deep connection. And so, our philosophy has always been to maximize the value for everybody. And by the way, if that's your outlook at the beginning, it's an easy thing to do. And so we've worked very hard at that, and we're very committed to it.
Thank you. Now, Jamie Beck, another highly successful frontline manager who could go to work for anybody, anywhere, but has chosen Lundin's. Jamie, if you could talk to us in the same fashion, how the Lundin family incentivizes these wonderful top-line CEOs and managers, and how they've done so over the last 40 years.
Thanks, Rick, and thanks for having us to the Sprott conference. I'm Jamie Beck. I'm the CEO of Filo Mining. We are a copper gold explorer in Chile and Argentina, exploring the Filo del Sol deposit, which is proving to be just a massive copper gold system that we're exploring. Ira talked about culture. Ira talked about sort of, the importance of not only attracting talent, but keeping talent as part of the team. And I think not only in my own personal career path, that's, but also some of our longest serving employees. I was fortunate enough to join early on within the group as a young student at a school, working in the corporate development group of Lundin Mining, and gradually presented various opportunities through the years to grow, to work with the different companies, to get exposure to different assets, and to be presented with opportunities there. And for me, that was something that was crucial. I saw a huge advantage to my own personal career. So not only incentives in terms of equity and alignment with shareholders, but incentives in terms of allowing opportunities for growth within the organization. I think our team in South America also speaks to that as well. We have a few key geologists who were involved in the discovery at Veladero and continue to be some of the longest serving Lundin employees, moved on from that Veladero discovery and worked for Voitech for many years at NGX, developed that land package that we now have between Filo, NGX, and Jose Maria. And I think the opportunity to be involved in well-funded, exciting, world-class style deposits helps retain those people and keep that talent within the organization. So keeping people's incentives aligned with something that they're interested in, which for these guys in Argentina was continuing to explore and continuing to have the backing to go out and try and find these tier 1 deposits was huge for for keeping that kind of talent within our group.
This discussion has been useful because too many teams try to grow for growth's sake with too much dilution. The next thing I'd like to talk about is the Lundin's focus on accretive growth, which is to say growth in per share value rather than growth in enterprise value. And I'd like to address this next topic to Jack Lundin. Talk to us about growing not for growth's sake, but growing for per share accretion. Why that's important to the Lundins, why it's important to their frontline managers, and of course, why it ought to be important to shareholders. So Jack, talk about per share growth rather than gross growth.
For sure. So, I mean, that's fundamental to our business. We have projects in different parts of the world. We've got different companies operating with different commodities. But really what we do is we look at the asset and we go, okay, how can we maximize the value? And usually what you're doing is you're looking at bringing it from one phase to the next. And, Wojtek, who's the CEO of NGX, he can talk a lot about bringing project from early grassroots exploration into study phase from years of work, years of geological work. My experience is more with looking at projects that are in early study phase, putting them into the development phase, and then ultimately getting that asset into operations. And so, we focus on continuing to drive projects forward. And each project in each company is in a different phase. And usually what you'd like to do is you'd like to kind of tap into the experience that exists within the group with experienced people that know how to develop projects, or experienced people that know how to explore, or experienced people that know how to operate. And so that's kind of a unique feature of the group where we can pool together our resources, although we're still operating with that entrepreneurial mentality. So for instance, from Fruta del Norte, we're able to get some key individuals that were working on the development. Now that Fruta del Norte is in operations, we can take those individuals and bring them to Cerro Blanco and try and focus on the development there. But what we're doing there, we're creating value, we're creating catalysts that will drive the share price up through naturally advancing the project from one phase to the next. And when the markets turn around, and what we're seeing now is it looks like we're entering a very strong bull market, especially in the gold space. There will be new opportunities to look at projects to bring into the Lundin Group and continue to develop. So, for us, that's what we're always trying to do, continue advancing each project responsibly, efficiently, in a manner that makes sense for shareholders.
Wojtek, I'd like to address the same question to you. You have a bigger challenge, which is to say minimizing dilution in an extraordinarily capital-intensive part of the business, which is to say exploration. Minimizing dilution when you have no income, only outgo, is a particular challenge. So if you could talk about per share accretion through exploration, I think that would be very useful to our listeners.
Yeah, I mean, that is probably the most important thing for the junior exploration companies. You've got to make sure, every dollar that you raise is hard to come by, and it's expensive, and especially expensive in difficult markets. So you've got to make sure that you spend each dollar on an activity that is going to add value. So that means minimizing your administrative overhead, and all of the Lundin companies across the board run with pretty lean corporate teams. And our most of our money goes into the ground and into our local guys who are actually carrying out the project. So to me, that's the key thing, is making sure that the money is spent on things that add value to the shares and add value to the shareholders. And the NGX has been, I think, pretty good at that. We've been very efficient explorers, and what we've done is exactly what Jack says. At each phase, with each incremental amount of money that you spend, you want to make sure that you're answering some sort of key question about the project that you're working on, and that each dollar that you spend is helping you get to a decision point. And really, that's the way that you have to look at spending your money in an exploration company, but further along the development pathway as well. Just make sure that everything that you're doing is goal oriented, gets you to a decision point. And then when you get to that decision point, you've got to be tough. If things aren't working out, sometimes saying no and getting rid of something is the right decision. And then if you've got good results, well, then that's what ideally helps you raise that next increment of money at a higher share price. And that's really what it's all about. It's making sure that your money is going into things that get you to decision points, things that get you catalysts that are going to be of interest to investors, that are going to raise your share price, and that are going to let you raise your next increment of money at a higher share price. It's really about that simple.
Wojtek, I need to congratulate you. You answered that question perfectly. That normally doesn't happen to me with a geologist. So thank you. Thank you for that. I want to answer some of that question myself as an investor, because I think the Lundins might be too modest to answer the question correctly. I think the expectation of success that the market has and the trust that the market has in the Lundins allows the Lundins to have the luxury of knowing that they'll be able to finance when it's appropriate to them rather than when they need to. And the fact that the Lundins have for 40 years participated in virtually all of their own financings, I think lowers the cost of capital. I think one of the reasons why the Lundins have been able to be per share accretive is the brand recognition that the Lundin Group has earned over the years in capital markets, and their willingness to invest their own money, but also their ability to take money not when they needed it, but rather when it was available to them on terms that were attractive to them. I want to move on and talk a little bit about that track record. I want to talk about what I see as one of the real strengths of the Lundins over the last 40 years, which is the contrarian nature of the Lundins, the willingness to invest in commodities that are out of favor, the willingness to invest in countries that many of their competitors can't spell, the willingness to adapt strategies that are suited to the family with the family's own money. And I would like to begin again with a third generation Lundin spokesperson, Adam Lundin, who can talk about the sort of history of contrarian investment, both in terms of commodity and place. Adam, if you could talk about your family's history and the future as contrarians.
Thank you, Rick, and thank you for hosting us at the Sprott conference. It's good to be here. I'm currently CEO of Jose Maria Resources, and we're pushing forward our copper gold porphyry in Argentina, in San Juan, a place we've been for the last 30 years, where we've had a lot of success and will continue to have further success. But being contrarian is kind of what the group is all about. Being contrarian is buying deposits when no one wants to be in the space. And a lot of the time when you go out and do that, the deposits are relatively cheap compared to what they're worth today. I think Ron and Lundin Gold is a great example. I had the fortunate opportunity. I was at an investment bank and helping Ron and Lucas raise equity to finance the purchase of FDN. And we were going around, I think the day we were closing the deal, gold dropped about $80. And at the end of the day, we had one last meeting with a big hedge fund who invests heavily in gold. And he took the meeting to try and talk us out of doing the deal. And that just threw more fuel in the fire. I think Dad increased the amount of equity he was putting in the deal because of that meeting. And so when everyone is fearful and not wanting to move forward, it's the time to go ahead. And for me, being on the job and being a part of these projects for the last 3 years, and now it kind of coming to fruition in the sense that when I started, in Jose Maria, we were 21% equity owners. Today, we're 36% because we've been financing the company. We've been taking more than our pro rata, sometimes because we were the only ones at the table at the equity raise. And now today, getting chased by bankers to come and give me bought deals and everything because copper is back at $3 and it's turning into maybe the next flavor of the month. And seeing us, we had our vision, we had our strategy. Let's go ahead and execute this district. Let's get Jose Maria in production. Let's see how big Filo can get. And just because it's tough times doesn't mean you should be discouraged. Keep moving forward in tough times. And a lot of the time, if you can and you do have that ability, you'll come out with a better ownership. And by the time people want to get involved, you'll be ahead of the game. And so it's super exciting. I think that's what the group's all about. It's about being contrarian. A lot of people say, the trend is your friend, but the trend means, you're too late, where you got to be there early, start early, and definitely go against the grain.
Lucas, the same question. I've had the good fortune to invest with the Lundin Group in, let me think, New Guinea, Iraq, Ras Al Khaimah, Sudan, Argentina, Congo. Talk about being contrarian. Buffett famously says he got rich by being brave when other folks were afraid, and afraid when other folks were brave. So, Lucas, you've been in this game for 30 some odd years, following your family. Talk about how contrarianism has worked for you and how you see it working for you in the future.
You have to take contrarian, because if you do that, there's possibility to acquire assets at a lower cost of capital, like Fruta del Norte is a perfect example. We bought it 5 years ago, and it was a complicated situation in Ecuador. The gold price was very weak. Was a very, very good deposit. So we were able to acquire it for a reasonable price and push it forward. Of course, it's tough because it's very hard to call when the right time is, because, you might have to suffer for 4, 5, 6 years before your call is right. So it's contrarian is easy to say, hard to do. So, and then at the same time, we look at those big deposits, and, we said, with the big deposits, of course, we survive cycles. We're in a strange business because we never know what our end product is going to cost. We're going to sell for. You know what the copper price is going to be, you know what the gold price is going to be, you know what the zinc price is going to be. So it's super important to be low-cost producer, because it's one of the strange businesses. That's why private equity can't really buy mining companies, because they don't know. You can't put in a spreadsheet, you're going to sell the copper for $1 or $2 or $3. The best way for us is we see deposits like that. When people don't like it, we can move in quickly, acquire it, and then we'll be able to sit on it, and then, at the right time, bring it forward in production.
You're also agnostic to some degree as to place. I have been with you, well, I'm with you now as an example, in Nigeria. I went with you into Congo during periods of time when most people wouldn't do that. And in every circumstance, with regards to my experience with the Lundin Group, when you've taken political risk, it's paid off in spades. Could you talk to that a bit?
At the end of the day, it's very hard to find large, rich deposits, so you can't really choose where they are. So, so you have to go where they are. Of course, we will have it in central England, be great, but usually we can't find big deposits in central England. So that's, I think, only one exception. Norway, we've been very, very successful in the oil and gas business. And there we found one of the largest deposit oil and gas fields in the world. At the time, Norway didn't have the right fiscal regime for the smaller companies. And we moved in, and then there the country changed the fiscal regime to make it better for juniors to come in. So I guess it took an opportunity where the country changed the laws. So it's very hard to be choosy where you're going to go find the deposits, because they're formed in different places of the world. And for us, it's more important to find a good ore body than anything else, or oil and gas field. So so that's, we can't really decide where that's going to be. So it's hard enough to find them, and very hard to create them. So so we go where they are.
I'd like to move on. I have argued that one of the Lundin family's advantages is their financial brand, and the fact that lowers their cost of capital. So I'd like to talk now about financing and dilution. I'd like to talk about the Lundin Group's ability to finance projects that other people can't finance, and their feelings with regards to and their use of equity issuance and dilution. And I'd like to start with somebody who has a real challenge in that regard, David Cates. A challenge because he's in the uranium business, which is distinctly out of favor. It's a commodity that hasn't performed for a while, but in addition, it's a commodity that when people think of it, they think about Hiroshima and Nagasaki, 3 Mile Island, and things like that, not simple economics. The idea that you can finance a uranium deposit with minimal dilution is a very interesting circumstance, despite the Lundin family's track record of success in uranium. David, talk to me about financing and dilution.
Well, Rick, thanks very much for that introduction. I feel like I got a little extra attention there with the challenges of the uranium space. But I am the CEO of Denison Mines, and we are the Lundin Group's uranium vehicle. And we have a long track record and a long history as a uranium developer, producer, developer, explorer, and now developer again. And you're right, dilution has been a big part of our story. Dilution in itself is not it's not all evil. We issued 400 million shares, between 2007 and 2018. Now, that sounds bad, right? But it's really about what we've done with it. And that's where it goes to your point about the Lundin Group's capabilities and its track record. In that time, if I told you that we've actually increased our reserves per share by 140%, 140% increase. I mean, that's why we have been able to access capital, because we're generating results. And at the end of the day, the uranium price is a real challenge. What can we do? Well, I can't change the price of uranium. What I can do is make sure that every dollar we raise from the market is treated with the highest level of regard, and that we turn it into results. And so when I look at that 140% increase in our reserves per share, I can say that we've done that. And if I just layer on some of the other topics we've talked about, when you look at financing something like uranium, it's important that you have the right kind of project, right? And you really want to manage things like upfront capital costs, because the more you have to raise, of course, the bigger the challenge. And with Wheeler River and our Phoenix ISR development plan, we've put together a plan that requires in the range of $325 million upfront capital. And that's about $1 billion less than most of our peers in the Athabasca Basin. So that's a technical way that we've approached this to really minimize the risk around financing, and ultimately the dilution of the investor, is by having a project that has lower upfront capex.
Now, Wojtek, I want to move on to you with financing and dilution, which is normally a problem in the exploration business, and talk about the idea that at least some of your spinouts have been anti-dilutive, which is to say, in a capital-intensive business, you have actually been anti-dilutive. So if you could talk something about your strategies in the exploration side of the business and how you manage dilution and, in effect, counteract dilution, I think that would be a fascinating segue in this discussion.
No, that's a great question, Rick, and it's actually one of my favorite topics. So I'm happy to talk about it. So I've run NGX, which has been the project incubation vehicle in South America for the last 10 years, and we've definitely experienced all of the challenges that Rick has talked about. It's tough to raise money sometimes, and we've been very fortunate in being part of the Lundin Group and being able to raise money when other people haven't been able to do that, and that's been critical in advancing the projects that now form the core of 3 separate companies, NGX, Filo, and Jose Maria, and being able to advance those projects when most of our peers were not able to do so. So I'm going to run through some numbers here to illustrate our approach and to try to answer your question here. So in 2009, when we first put NGX together, we had a market cap of around $40 million. So since then, over the last 11, almost 12 years, we've raised over $150 million and issued in the original NGX around 100 million shares. But what's really important here is what we did with that money and what we turned that money into. So that money turned into 38 billion pounds of copper, 28 million ounces of gold, and 356 million ounces of silver distributed between the 3 deposits that we discovered with that money. That translated into what I think is the ultimate measure of whether you're good at using shareholder money as an exploration company, and that's our discovery cost. So if you spread that $150 million that we raised over each one of the commodities that we found, that translates into a discovery cost of less than half a cent a pound per pound of copper that we discovered, a discovery cost of around $5 for every ounce of gold that we discovered, and a discovery cost of around 44 cents if you measure it in terms of silver. And that's a pretty amazing track record. Just for reference, the average industry cost of finding an ounce of gold is around $44 an ounce. So I think we were very efficient about how we spent our money, and we were very lucky and fortunate in the results that we got for the money that we spent. The second thing that we did, which I think is important, is we were really creative with what we did with our assets. And I think we listened to the market and we listened to what our investors were telling us. So we made 3 discoveries in one company, the original NGX. Then in 2016, we realized that we really weren't getting a lot of credit for what we thought was the most exciting asset and the one with the most exploration upside, and that was Filo del Sol. And so in 2016, we spun that out to our shareholders, and now Filo Mining, which Jamie Beck runs, has a market cap of around 180 million. And interestingly, when we completed the spin out in 2016, the market cap of the original NGX didn't go down, it stayed the same. And then the value of Filo very quickly rose to, roughly where it is today. Last year, we did one more spin out because we recognized that the Jose Maria project was heading down the development path and that would probably get more attention and more value in a single purpose vehicle. So we separated Jose Maria out into its own company, and now that trades at a market cap of around close to 200 million. And then NGX itself, which retained actually our largest discovery, Los Helados, trades at around a market cap of $50 million. So I think what's important here is that because we spun those out to our existing shareholders, the benefits of those spinouts and all of the benefits of the work that we've done accrued to our original shareholders. So I think we were really efficient in the way that we spent money, and then I think we were really creative in the way that we used the capital markets and used our knowledge of the capital markets to make sure that our investors got a chance to realize those benefits. So I guess just the final point I'll make here is just to go back to the beginning. We started out with a market cap of around $40 million in the original NGX, and then the three daughter companies now trade at a combined market cap of over $430 million. So that's been a great return for investors who stuck with us all the way. And despite the bad name that dilution gets, I think we were able to generate a whole lot of value. And I think the really important thing here is that we were able to generate that value while keeping a majority interest in all of our projects. So, we didn't have to bring in a partner that then ended up controlling the project. We control our own destiny. We control 100% of Jose Maria. We control 100% of Filo. And spending that money has given us the ability to benefit from it as markets turn around.
I want to move back from exploration to development and production. And I want to talk about really developing a theme that Lucas talked about a bit, which is to say it's very difficult to do commodity price forecasts going forward. You don't know if the copper price is going to be $1, $2, $3, $4. And the challenges are even broader in the uranium business. So I want to talk about the Lundin Group's history of reasonable commodity price forecasts. But I want to talk about how price assumptions go into the investment decisions by the group and, of course, into the feasibility study. And I'm going to start with what I see is the toughest challenge of all, which is the uranium market. David, could you talk something about the variability in uranium prices and how you make investment assumptions around a market that's as volatile as uranium?
Well, look, Rick, that's really well put. Uranium has been a roller coaster. And Lucas will be the first one to tell you that. And so, when we've looked at assessing the merits of advancing a development project like Phoenix with our ISR plan, we've really decided to approach this different than many of our peers. Look, I have a view that the uranium price will be much higher in the future, but at the end of the day, to make a decision today and use the shareholders' money to actually advance the project today, I want to make sure that this project has high margins and will do well in the best and the worst, and mostly the worst uranium markets. We ran a price deck for Phoenix that is nowhere near any price deck that our peers are running. We actually ran it in our 2008 PFS using a price that was about 10% above the then spot price for our first pounds of uranium that we would be selling. Now, flash forward almost 2 years, the uranium price has lifted a little bit. It's still cyclically very low. And yet our first pounds are being sold in our PFS model at a 10% discount to that uranium price, while our peers are still relying on a 50% uplift in the price. So that's the logic that we put in here, is that we have a potential tier one, potential world-class deposit, and we can flex our muscle by showing that we can make money even in a low price environment. And to build on that we can use that understanding to justify advancing the asset now, even though the uranium price is cyclically low. And that really ties into this contrarian concept that the group has been talking about, and being able to invest in the asset now while it's out of favor and the commodity's out of favor, because we know it'll make money even if the price doesn't rise. But when it does rise, we'll be built and we'll be able to take advantage of it. So it's really about driving home that shareholder mindset and saying, well, what is it that the shareholder wants us to do? How are we responsible to the shareholder? And I think we're seeing that the conservative pricing is a really effective way to look at how will we make money and should we spend the money, right? And assessing that question.
I think the most important summary discussion that we could have is about the Lundin Group culture. There is a wonderful book written about the now deceased Adolf Lundin called No Guts, No Glory. And I would argue that this no guts, no glory culture, but also the culture of respect for shareholders, the culture of respect for managers, the culture of respect for local communities has been an important part of the Lundin franchise. And that franchise itself has lowered the cost of capital in a capital-intensive business, which is a decided competitive advantage. So I'd like to return in this conversation to Lucas Lundin and talk something about the culture of the Lundin Group, a culture that I would argue was inculcated by Adolf and, in fact, Eva Lundin, continues through Lucas and Ian Lundin all the way to the third generation and is, of course, embodied by all the frontline managers. Lucas, talk to us about no guts, no glory.
I think no guts, no glory is a question, trying to take calculated risk. It's great to discuss all this fantastic deposit we discovered, but nothing happens without the culture and the people working with us together. We're as a team. Everybody knows each other quite well, I think, and most people that work with us or with me, in the front line have been around for 20 years or so. So we all understand each other, and none of the success would ever happen without having the people behind it. It's good to find deposits, but it's very easy to screw them up too. So you need the right team around. I think that's happened through the years because we've been in the business a very long time. So we have a very good culture within the group because we've been fortunate to have that. And now we have Jack and Adam and Will or Harry. They're going to bring up a younger generation of people to come along, because some of us are getting long in our teeth. So, we're trying to build on the past, to get young people in the future, which is very, very important.
And finally, I'd like to talk about the same topic with one of the third generation of Lundins, Adam Lundin. Adam, I want to talk about the legacy that you inherit from your grandfather, from your uncle, from your father, how the Lundin culture has shaped who you are and your career, and how you plan to use this legacy to build the Lundin Group in the future.
Thanks, Rick. And I think starting, when joining the group 3 years ago, and people ask, oh, now you're joining the family business, do you feel a lot of pressure on yourself to be successful? And honestly, when I get that question, I could respond quite quickly. And I didn't feel the pressure, and I still don't feel the pressure today. Do I want to be successful? Do I work 24/7? Yes. Am I on a relentless pursuit of higher share prices? For sure. But why didn't I feel that pressure? And it was because of the people around me and the team we have in the Lundin Group and the guidance that I get today from the people who've been around for 10 plus years. It's super exciting. And it's an honor to be a part of the group, and I look forward pushing it forward with the people in the group today, and also bringing new additions on and hiring younger people and pushing forward, creating higher share prices, but more importantly, making the world a better place.
I think it's important to wrap up this discussion with another reference to Adolf Lundin and no guts, no glory. This was, for me, a particularly important interview and a particularly important part of the conference because of our long-standing relationship with the Lundin family, but also because the Lundin family exemplifies most of the investing trends that this conference has always been about. The Lundin family has graciously agreed to make an electronic copy of the biography of Adolf Lundin, appropriately titled No Guts, No Glory, available to any conference attendee or exhibitor that requests it. You will see a link appended to this interview, and if you click on that link, and fill out the contact form so that we can know who to send it to and where to send it. As I say, the Lundin family, the Lundin group, has agreed to make available a copy of this biography. This is an IQ test, okay? Get this book, read this book, come to understand how this family fortune was made and how the family fortune was grown. Understand something about the culture of the Lundin family, where the third generation of Lundins are as aggressive and as smart and as honest as the first generation was. Learn something about the culture that attracts all these frontline managers who could work anywhere in the world for any group. Learn something about a group that has been serially successful and how they've been serially successful. I'd like to thank the Lundin family and all of the presenters today. I think this has been a wonderful content addition to the Sprott Vancouver Natural Resources Investment Symposium. Thank you also for 4 generations of opportunity and, frankly, friendship and amusement. Thank you all, ladies and gentlemen.
Thanks, Rick.
Thank you, Rick.
Thank you very much, Rick.
Thank you.